and welcome to this episode of Three Questions. I'm Greg Michlig, President and CEO at CUInsight.com, and it's great to be joined by Larry Meador, Chief Executive Officer at evok Credit Union Marketing. Larry, thank you for being here.
Thanks for having us, Greg. We greatly appreciate it. Thanks for the opportunity.
My pleasure. And I know our audience is very eager to hear your valuable insights. So let's start with this question. Your agency works with credit unions across the country on growth, member acquisition, and brand strategy. From your perspective, what's the biggest shift happening right now and how credit unions need to think about marketing and member growth?
Right. Compelling there. There's a lot of shifts going on as we see. It seems like it changes daily, right? But I think probably one of the biggest shifts is, that marketing's become much less about communication and much more about growth. May sound like a small distinction, but actually it's pretty significant change in how successful credit unions are approaching the market. For years, marketing conversations really centered around campaigns, media, creative concepts, product promotions, things like that. And those are still really important. But what we're finding is the highest performing institutions are really asking, they're asking their members much bigger questions. They're asking how to attract the right members, how to deepen their relationships, how to improve retention, how to convert indirect members, as we all know is such a challenge, into primary relationships, and ultimately how to become the member's first choice when a financial need arises. What's interesting really for us is that the industry remains incredibly strong, which is great. Credit unions now serve, I think more than 145 members nationwide, 145 million members nationwide, and manage more than $2.5 trillion in assets. And that's an amazing success story. But our team looks across the country. We see that growth isn't really being distributed evenly. Some credit unions are growing aggressively, while others are finding it really increasingly difficult to stand out. From our perspective, the difference usually isn't about products. Most credit unions offer competitive rates, great service, compelling value proposition, the value prop. The difference is often intentionally how they're managing that growth. At evok, we're having far fewer conversations about individual campaigns than we were a year ago. Today, we're really talking about the entire member journey. What happens before someone becomes a member? What happens during onboarding? What happens 6 months later? What happens when they need their next financial product? What happens when circumstances change in their lives? Because growth really rarely happens because of really an ad or an advertisement or a slogan or a campaign. Growth happens when all those experiences kind of work together. And the good news is that credit unions already have something many organizations that spend billions of dollars trying to build. They have trust and they have community relevance. And if I had to summarize really the biggest shift, again, it's pretty much this to encapsulate, marketing is no longer just about promoting products. It's about helping the right people make the right financial decisions at the right time and building lasting relationships as a result.
Yeah, you cited some of those growth numbers for credit unions, and I've been in the industry a long time. I know that's fast growth when it comes to number of members and assets under management and things like that. But you really hit on the point of that deepening of the relationship. Growth comes in many different forms. Those numbers are great, but you still have to grow within the credit union and the primary membership, what you're working with your members to deliver. So I know your team has really done a lot of work recently around persona development and behavior-based marketing for credit unions. So why are so many traditional demographic-based marketing strategies starting to fall short?
Yeah, some of them still do, right? So I think really one of the things that we've learned over the years is that demographics really only get you so far. They tell you something about a person, certainly. They tell you about their age, their income, geography, primary household makeup, homeowner status. There's like a lot of things, demographics you can get really in a target audience. But all those things, and they have value, but they really don't necessarily tell you why someone chooses one financial institution over another. And that's where it really starts to get interesting for us when we work in behavior change and behavior modeling. When we conduct persona workshops with credit union leadership teams, one of the first things we discover is that members who look very similar on paper behave differently in real life. You can have two people who are roughly the same age, make similar incomes, have similar neighborhoods, and yet make completely different financial decisions. One may be highly motivated by convenience. Another may be looking for personal guidance and advice. One may care really deeply about rates. Maybe another's focused on trust. One may value digital capabilities above everything else, while others simply wants confidence that someone will answer the phone when they need help. The motivations are often far more predictive than demographics alone. And that's why we become strong believers in behavior-based marketing and persona development. And when I say persona development, I'm not talking about creating some kind of fictional profile with a stock photo and giving it some kind of clever name. What we're talking about is understanding what motivates people, what concerns them, what barriers exist, and ultimately what causes them to take action. One of the questions that we ask during our workshops is we'll say, what has to be true for this person to say yes? That question tends to kind of change the entire conversation, because once you understand what drives a decision, the messaging becomes more relevant. The content becomes more relevant. The onboarding experience becomes more relevant. Everything starts to align more closely with the needs of the prospective member and now the member. A great example is indirect members. Many credit unions have thousands of indirect auto loan members, and on paper, they look like ideal members. Strong credit profiles, good incomes, great demographics, but behaviorally, many of them don't even know the credit union is their financial institution. They view it as a place that happens to hold their car loan. It's just a place where they mail their car payment or online make a payment. And that's completely a different challenge. And solving that challenge requires a much deeper understanding of behavior than demographics alone can provide. And we believe that the biggest growth opportunities in the industry today is helping credit unions better understanding not just who their members are, but why they make decisions. Because once you understand the why, you can create experiences that are more relevant, more helpful, more insightful, and ultimately more effective in building long-term relationships.
Speaking of those indirect members and just in general, credit unions are competing against larger banks, fintechs, and increasingly digital consumer expectations. So, what are the smartest organizations doing right now to position themselves for long-term growth?
Yeah, they're competing against everyone, right? They're competing against those banks and fintechs, but they're also competing against, Amazon and eBay and every other online, website that really is focused on the what we call UI UX, the user intent and user experience. And so you have to almost keep up with the Joneses there. From our perspective, the smartest credit unions are really doing a good job of balancing two things that always don't seem kind of like they go together. On the one hand, they're protecting and strengthening the things that have always made credit unions special, that trust that we talked about, the service, the community involvement, member advocacy. Those things still matter tremendously. But on the other hand, they recognize that consumer expectations are changing rapidly. Today's consumers don't just compare their credit unions to another credit union. As I said, they compare them to Amazon, Netflix, Uber, Apple, every other digital experience that goes through them that they engage with throughout the day. It simply means convenience matters, simplicity matters, digital experience matters. One of the things we're seeing more in the strongest institutions, they're becoming much more intentional about turning that data into action. More organizations today are challenging it, but they're not just collecting it anymore. The challenge is using it to improve onboarding, identify growth opportunities, strengthen engagement, and they're taking the data and really building upon it. When we talk about social media, we also will a lot of times tell our brands, we'll say social media is not just an opportunity. It's not a spoke in the wheel to reach your audience. It's not something to push messaging out. It's a listening tool as well. And you have to make sure that you're gathering that data and those insights, you can kind of build upon it. 10 years ago, most people started with a search engine. Today, they're searching Google, watching YouTube videos, reading reviews, listening to podcasts like this, scrolling social media feeds, increasingly asking AI platforms questions directly. Consumers are asking things like, what's the best credit union for first-time home buyers? Or where should I refinance an auto loan for a used car? Or what's the best financial institution for me as a small business owner? The institutions investing in really educational content, thought leadership, digital visibility, and discoverability today are positioning themselves for where we believe consumer behavior is headed. And finally, the strongest organizations are focusing less on products and more on relationships. As we talked about earlier, they're not simply measuring how many products a member has. We use that term a lot when we say share of wallet.
Mhm.
They're looking at engagement. They're looking at retention. They're looking at whether or not they become the member's primary financial institution, because long-term growth comes from trusted relationships, not transactions. And that's where I think credit unions have an enormous advantage and why we love this industry. Most fintechs are trying to earn trust, but credit unions already have it. Many large banks are trying to create a sense of community, but credit unions already have it. The opportunity is now taking those traditional strengths that we have and then pairing them with modern digital experiences, stronger data strategies, and deeper understanding of how consumers discover information and make decisions. The institutions that we believe that successfully do that are going to be incredibly difficult to compete against over the next decade. And honestly, that's one of the reasons why we're so optimistic about the future of credit union industry. The foundation's already there. The opportunity is simply building upon it more intentionally than ever before.
That was a strong close, kind of a mic drop moment for you. I'm not going to get in the way of that. I'm going to leave you with that. I'm going to thank you for joining me on the three questions video interview. Appreciate your time and appreciate the partnership with evok.
Thank you, Greg. We really appreciate you guys, and thank you very much for having us on today. We greatly appreciate it.
Very good, and appreciate all of those who tuned in for this three questions video interview as well. We'll see you next time.